All right, everybody. Good morning, good afternoon, wherever you are. I guess it is noon, afternoon time in the eastern part of the United States. But it has been a wild day in the markets after a hotter than anticipated inflation print here early this morning. There was a lot of selling happening throughout the board, including precious metals. But then something strange happened. Gold and silver started behaving very differently compared to a lot of the equities on the big boards. In fact, the GDX right now, as I sit, is up 2.4%. That is a reversal, intraday reversal. So there's a lot of things to discuss here. So we are going to welcome in Bill Fleckenstein from Bill Fleckenstein Capital, and there's just a lot to take away and some to analyze here, Bill. But I guess start off this morning, 8:30 a.m. Eastern Time. Inflation print comes in hotter. Tech stocks sell off pre-market. Gold sells off. The GTX sells off. But here we are, early afternoon, and things are telling a very different story. How are we supposed to absorb this?
Well, first of all, if you think about it, the knee-jerk reaction to sell precious metals on a hotter than expected, slightly hotter, a tick, um, seems pretty silly, right? If you own inflations for some inflation protection and you get more inflation, why should you sell metals? Well, the thought is, well, the Fed's going to be hawkish now, right? The bond market's going to go down. And that thought bubble worked for quite a long time, but it really hasn't worked very well in the last few years. People thought that you could trade gold by watching what tips did. And when the tips market was saying, there was more inflation coming, then or the 10-year real yield was moving up, so-called real, because you have to know what the inflation rate is to know what the real yield is from the nominal. But that would dictate gold prices. And I had a very smart fixed income manager telling me gold was easy to trade because you just did that. Well, that stopped working. So the gold market has changed its sort of personality for a while now. However, in the last, so call it in 25, it's really started to change because we recently saw that there was this disturbance, shall we call it, in lease rates and what's available for lending and usage in London, and a bunch of it moved to COMEX. And there was a big order where someone stood for delivery for, say, $4 billion worth. And then there were the tariffs. So it was hard to figure out. Gold all of a sudden started going up on days when it was behaving in a way that it usually doesn't, except for at blow-offs. Only this has been going on for a while, and it hasn't been a blow-off. I guess it still could be, but it's not acting like that. And I think a lot of people, myself included, was sort of inclined in the beginning to kind of say, well, this is probably related to tariffs and it's not something new. Now, the longer it persists, the more it may mean something is different than what has occurred in the past. And so many of us had conjectured for quite some time that with all the metal that moved from the West, i.e. America, Canada, to the East, coming out of the GLD and places like that, the move to China and India and the central banks taking gold, all that bullion came out of the market, right? We have to remember all the gold that's ever been found pretty much is still in existence and above ground. Gobs of that were in the London vaults. And for the longest time, people thought supply was virtually unlimited because you could get all you want at the vaults. And so while gold is scarce, it wasn't really perceived to be a scarce commodity, at least in financial markets. Now, we may have I and a couple other friends had hypothesized that one day there wouldn't be enough metal to run the market as it had been run because so much had gone to Asia, i.e. the market would become thinner. A market that's got a lot of size behind it has a tight spread and it's not particularly volatile, usually. So when it gets to be a wider spread and it gets more volatile, it's probably thinner. It's not always the case. Now, that doesn't necessarily change price, but it changes perceptions, which can then change price. People start to think, well, perhaps it's scarcer than we thought, Ergo, maybe we should pay up in price, or maybe we should own a little more. And I think there's a really good chance that that's what's happening. This is just not an over exuberant, speculative blow off. The length in the futures market is on the, you know, um, from high to low, it's kind of in the middle, right, of the last group of years in
Right.
terms of how many contracts are out there. The sentiment figures, as per the DSI, aren't really lopsided, and the participation by the public in America is practically non-existent. You don't see it in the GLD, and you don't see it in the miners. Now, as you noted today, the GLD is up 2.5%. But what's interesting is the way it all came about today. Is there may be information in that. So what happened? We had this dopey CPI number that you pointed out was a little higher than expected. They smashed gold, went down 1%, silver went down 1.5%. And they started coming back. Also, Barrick reported today, a company the world loves to hate. Usually they have trouble executing just because their minds are such that they're just not in great places. And they usually wind up losing at Wall Street's ridiculous game of beat the number. Today, their earnings were fine. The production was a little light. There was plenty to find. If you wanted to sell it, there was plenty of reasons to want to sell it, as people usually do. And yet it was up when gold was down. So that was another little change. Now, I don't want to make too much out of it, a change in action for a day or two, but it's actually been a little longer than that. And so what we're seeing, and then the metals, of course, the metals have flipped around. Is now where we're having this conversation. Silver's up 1% and gold's up, $8 or $9. So when it usually in the past, when we would be up at the top of a range of like we've moved up kind of relentlessly, and we had a wobble the other day, and then today we had supposed bad news, and they had it down 1.5% in a straight line. Usually that day would end up being down $40 or $50, and we'd have a correction for a couple of weeks. Instead, today it fired right back. So it could be that the sort of the personality of the gold market is in process of changing, and if so, if it starts to be perceived as a rarer asset, psychology will change, and people may pay up, and maybe Americans will finally get the memo and start buying the miners. So there's my long answer to your short intro question.
All right. Interview done. No, but let's pick apart some of the things you said here, Bill. And, we did read off the Barrick financials in the briefing this morning on the MSD briefing. And quite frankly, like I was reading through the news release. I didn't dig into the actual financial statement, but all in all, it seemed pretty good. And what was surprising to me, and this was on the back of things not going well with operations in Mali. And it sounds like, just because the margins of where the spot price was in Q4 compared to what, even though they were like above like $1,500, now it's all in sustaining. The margin's able to kind of carry them, and things looked pretty good. And so that's what we needed to see. Now, Newmont, I think, is going to be the bigger tell, because I think they've been a little bit more of a disaster in the last few quarters than Barrick. But I think people are starting to pick up on this.
I think Barrick's been a bigger disaster. I mean, Newmont's certainly disappointed, but Newmont sold a lot of assets, and has assets in better places. I mean, not they both have assets in bad places, but Newmont has more assets in good places. If Barrick, I don't have a position in Barrick, and I don't have a position in Newmont, but if Barrick was able to do what it did, I suspect Newmont will as well. But we'll see. I have no skin in the game, so it's easy for me to have an opinion.
Well, they gave you a little sense of what the costs were for the Nevada Gold Mines JV, and that was a little north of $1,400 per ounce.
Right.
So that obviously will play a factor into the Newmont earnings.
Exactly.
But I think I'm asking you this and kind of prefacing this because I want to ask you about potential realization of price discovery, not only in the metal with gold, but also with the miners, given where these margins are. We're going to start seeing these financials trickle in the next couple of weeks. And I've been in this business long enough to, like, my expectations are always terribly high. And a lot of times I've been very disappointed, Bill. But this time I'm trying to figure out what the the curveball is going to be, what I would have wrong. But I'm watching the spot price and I'm watching the costs, and I'm where these companies are at within the price curve of how much it costs them, and I'm having a hard time figuring out what I'm missing. And on top of that, I'm having a hard time figuring out why the market isn't paying attention as closely as they should be. I wonder if you
Well,
could help me out with that.
the latter answers the former. The market doesn't caring because in North America, people aren't. If you use the GLD as a proxy, okay, there is not any real enthusiasm in terms of the number of ounces it holds, right? You'd think in a proper bull market, as the price goes up, there would be the GLD would accumulate more ounces. That's kind of been the trend in the past. And net, we've been shedding ounces. People have been, liquidating their GLD. They think, okay, the price is up, I got to sell, right? And
Mm-hmm.
so if North Americans are not interested in gold, why would they buy miners? So if they're not interested in gold, they're not going to be interested in miners. Now, you would think the professional money management community would be interested because of the growth, the inherent inflation and currency debasement protection that gold. You can buy gold companies at reasonable prices. Some of them have done a good job of making money and doing a good job of capital stewardship. Newmont and Barrick not being a great examples of that, by the way. But the problem is the investment community in America has been skinnied down by the pervasiveness of the passive bid. So until the market caps can get up and get into the indexes, you don't get that automatic robot buying them every day. And so it's taken longer for the idea to catch. Once they get better price action, then maybe they'll get some enthusiasm. But again, Canadians need to want to own metal, to want to own miners. And that may be in the process of changing. We may be at an inflection point, and that may be changing. Remember, the collective market cap of the gold complex is probably, I haven't looked recently, but I'm sure it's under $150 billion. I mean, that's just one good wannabe AI stock for the entire gold production, publicly traded gold production in North America. So it's a tiny market. It's not going to take much capital to get it rocking and rolling. But thus far, that's been the case. So the companies report earnings. Nobody cares. Good earnings come out. They don't move the stock price up. People get disappointed. They sell it. It goes down. And since it went down, the idiots that write the press say XYZ went down because this line item or that line item. It's mostly been about apathy, right? And they would comb these reports, and there'd be something that was wrong. The ASIC went up at some mine or something, and they forget that this mining business is not like selling. It's not like running a 7-Eleven, right? So, in any case, I think that may be changing. It looks like it might be changing, but it's hard to say. Of course, by the time you figure out it's changed, prices will be up a bunch.
Right, exactly. You've done a great job of kind of laying out a fundamental case behind this gold move, not only the metals but in the equities as well. And I want to kind of maybe transition to a little bit of more of the speculative move and how much energy that is also propelling these things forward. I was out of the country all week last week in Argentina, Bill, in and out of reception, and it was really hard for me to play catch up with news and headlines coming out of the White House in Washington, D.C. In fact, the more I tried, the more confused I got, because the moment my phone would get out of reception, things would change. And so it just, at the end of the week, I was, understanding I was confused. I didn't know what direction things were heading, but then I'm watching the gold price move higher and higher, and I kept on wondering, it's like, is this kind of like throwing spaghetti at the walls as far as policy having any sort of impact on people looking for a safe haven move in gold, just not knowing exactly where it's going to land, who has tariffs, how much those tariffs are going to be, or in 10 minutes are those tariffs going to be off the table? How much of this, what's happening in Washington in the White House, is this playing any sort of part in these safe haven trades in the metals?
No, I think that the press writes safe haven. I mean, the press, the mainstream media is beyond pathetic. They're mostly liars. The financial press are just not very smart. They'll let the little AI bots write the press releases, and they say, gold's up, and they say haven demand, or if they don't have any reason I mean, the things you read in the financial press are laughable. Um, I if you took what the Trump administration is doing on its face, and you looked at the seriousness of the people involved, I would say that's not gold friendly. They are reining in ridiculous spending. They're exposing the fraud and the waste and the corruption, and they're trying to do the right thing. That is the opposite of what we have been enduring for, in monumental form for the last 4 years, and in some form or another for the last 20 and before that probably. I think the government's gotten progressively more corrupt, more unreliable, more run by grifters who think they're omnipotent and they don't work for us. So this, I would say, is kind of gold unfriendly. The fact that it's been that hasn't been the perception tells you that for whatever reason gold wants to go up. I don't think, you have to ask. In the past, a little bit of uncertainty didn't really help gold. You needed a real bona fide reason to get it to run. And the reason it's done as well in the past several years has been because of Asia and central banks, not Americans. So if the Americans really aren't calling the shots, why would Americans' perception of whatever Trump's doing? I don't think foreigners would look at it and say, gee, this wants to make me own the dollar less. I would think they would say, wow, these guys are going to maybe make America less of a basket case. You can imagine if they were doing that in Europe. Let's turn the tables. Let's pretend you had a Trump and an army of incoming temporary bureaucrats at the EU, and they were going to do what they just did. I think that would be very bullish for the euro. I wouldn't sell it on that. So I don't think that's why people are, I don't think they're going to inclined to think it's bad for the dollar, and therefore they want to own gold. Gold's doing this kind of on its own, I think. Now, I normally have no use for conspiracy theories. There's a large contingent of people in the gold sector who are think that the gold at the Fed is not there, or the gold that the Treasury is supposed to have isn't there. I've always thought that was preposterous. Now we're seeing that a lot of things we couldn't possibly have believed since the Doge Commission has been exposing things. I suppose it's possible that there isn't as much gold in the U.S. as there's supposed to be. I would never have thought this before we've seen the revelations that have come out of Doge thus far. Now I see how corrupt the government is and where they're willing to do just about anything to further their own cause, individuals there and collectively in the bureaucratic machine, a.k.a. the swamp. So could it turn out that somewhere in the past they used some of it for some nefarious activity and it's not there? I guess. I only bring that up because gold is percolating in it differently and for different reasons than it has. So does it have to do with market thinness? Does it have to do with this goofy quasi-conspiracy idea I just had the nerve to discuss in public? Because all the other things are the same. All the world's colored paper is a joke. All the governments are out of control. The path forward is going to be inflationary to solve this. But in the short run, what Trump and those guys are doing is the opposite of that. So if you just looked at what they're doing, I would think gold would be down, not up. So that's my answer to your question.
All right. I do want to spend just a couple of minutes here in the Treasury market with Treasury Secretary Scott Bessent and get a sense of, kind of the challenges he's faced with needing to put more supply of long-term duration out there. But what needs to happen for that? Because it just, from the cover of this whole thing, Bill, it sounds like what President Trump's wanting is a little bit contradictory to what the Treasury needs to do fundamentally to get things back on track after Janet Yellen issued so much short-term paper in the last 4 years. And, is this a dynamic that we, on the cover that we really need to be paying attention to? And what could the implications be here in the coming 6 months to a year.
Well, first of all, Besson is probably the most talented and market savvy um, Treasury Secretary that we've had, at least in my lifetime. So
Yeah.
he understands the problems. He understands financial markets. He's got a very good brain in his head, but he's got a tough hand to play. He wants to term out the debt. I mean, listen, these guys that say they want to make America great again and do the right things, they're serious. They're doing what they said. A lot of people hate Trump and so much they can't look objectively at what they're doing. They're trying to do what they said, which is of course unusual, and they're doing it at warp speed. So if he wants to do the right thing, he ultimately has to turn out the debt. But I wouldn't want to do that right now. His problem is they're going to try to do things that as they cut spending, that's going to impact jobs and the economy negatively at the margin. They want to drill for oil to increase energy independence and to keep the price of it semi-capped to help on the inflation front. So a little economic weakness from the job front, a little extra oil, or perception there's plenty of oil there to keep the lid on that. And they're going to get the budget deficit down. So they're trying to change the inflation psychology and outlook and the supply perception at a moment in time. They've still got to roll mountains of paper. So I think what he's going to do is, just keep talking about doing the right thing longer term. Hope that brings down rates so that the bond market doesn't back up while they're trying to do these things. And then if they can make it look like they can actually accomplish some of this, which is going to be a Herculean task, I don't see how they can cut enough. But I think that's the plan. And so they're not trying to do a short-term fix, and they're not trying to do what Janet Yellen did, which was just despicable. Her legacy at the Fed and the Treasury is basically criminal incompetence and outright just bad policy. It's like Mayorkas letting the border be wide open and say we don't have an an illegal immigration problem. I mean, they just lie to your face constantly. In any case, so he has a tough hand to play. Now, if you want to think outside the box, if they had someone friendly at the Fed, let's say they come up with a cogent plan for cutting spending, and maybe they come up with $1 trillion. That's a lot of money. I thought they could maybe only get 500 billion. Now I see how much waste is in there. Who knows what the number is? But if they came with $1 trillion, that'd be a big number. That'd get the budget deficit down substantially as a percentage of GDP. But again, they still got all this debt to roll. So if maybe what they'll try to do is it looks like they're on the right path of doing that, maybe they'll get the Fed to stop doing QT. They can't do QE, but they could stop doing QT. Wink, wink. Take a page out of Japan's book, where the BOJ has semi-permanently monetized half the debt. If we were in a crisis, I think they'd bring out yield curve control. But they could only do that if they had a Fed that was more friendly to the administration than I think this group is. If they had Greenspan in there, they could kind of deal with him in a heartbeat. So I don't know how that would work with Powell, and I'm kind of getting ahead of myself and thinking outside the box. But it's a serious problem. I had felt that we were probably 5 to 8 years too late in trying to address this deficit issue to be able to really move the needle. I was unaware, as I think most people were, of the absolutely epic size of the pure waste, graft, theft, whatever you want to call what's been going on. So, but the bond market, how Besant can finesse the bond market and deal with this, that's really the $64 trillion question. I don't know the answer. We have to keep our minds open to the fact that we don't have a dope at Treasury for once.
Well, and I think I agree with you, Bill, that I think a lot of the people he has put in place in his cabinet are probably the most experienced people, at least from the private sector coming into government, than people we really need and probably should be a foundation for who comes into future cabinets. As far as they're doing a great job, there's a big challenge in front of them, and I think they're very serious about doing what it says they're going to do. But at the same time, I'm almost like, well, it's hard to stay focused on, what they're doing when the president himself is launching meme coins and talking about putting a golf resort on the strip of Gaza. It's just kind of like, what the hell are we doing here? Like, and so that's the spaghetti that I think is a distraction from a lot
Yeah,
of the really good
but
work that people are
listen,
doing
I mean,
underneath them.
yeah, but I mean, everyone knows Trump's personality, and given that, the amount of pure bombasticity that has come out relative to the amount of policy they've done hitting the ground running across a broad front is really quite different from the last time around. Yeah, I mean the Gaza
Yeah,
thing, the meme coin was beyond stupid in my opinion. You know, um, but let's not focus on the 3% or 5% of 10% of what he said and trying to do that's stupid. The other stuff totally outweighs that, in my opinion.
yeah, fair enough. Okay. Uh, Bill, it's good to connect with you. It was an incredible day. I'm glad of all days, I'm glad today was the day we had
Yeah,
this
turned out
scheduled
turned
because
out pretty
we had
interesting
some,
timing actually.
yeah, it was great. I appreciate your time. You don't come on very often, but when you do, it's always a wonderful conversation. Remind people where they can find your work on Twitter and online.
My handle at Twitter is at FleckCap, and my website is Fleckenstein Capital. It's a paid site. It's not very expensive. It's about $12 a month, and I write a daily column about the market and I answer questions there. I think the Q&A is what most people enjoy the most, but who knows? You'd have to ask them.
Yeah. And I might add, you're a legend, man. You're a legend in this business. So I
In
always
my own
appreciate your
mind, you
time.
mean?
No, that's not the case. All right. Thanks, Bill. Have yourself a great rest of your day.
You too, Trev.